Welcome back. Let's talk to David Buik. He is the senior market commentator for Panmure Gordon. Morning to you, David.
Good morning to you, Moose.
Right, I want to refer to a headline, City AM this morning. Star fund manager boss defiant over Provident fall. The headlines, the CEO walked out, share price collapsed 66%. We've talked about Royal Bank of Scotland, Marconi as being sort of...
Ashton probably as well, yeah.
In recent history. It was a shocker. What are your thoughts?
Well, we'd had one profits warning. For some of your viewers not familiar with the business, it's door lending, front door lending, which is a lot of people frown upon it. And in point of fact, there are an enormous number of people in this country who if they went to the bank and wanted a loan, they wouldn't get it. So a function that Provident Financial provides is a decent function. It's not a bad function. They're not usurious in the truest moment. It's expensive and the rest of it, and they're pretty tough on it. Where it's gone wrong is through regulation and also, more to the point, the collection of debt. Up until this year, the percentage ratio of debt collection was 90%, which is pretty good.
So 90% of the funds were being returned?
Correct.
Okay.
This year, 57%.
Wow. So massive.
So it's a massive change.
Right.
It means a loss of somewhere between 80 and 120 million pounds, less profit than they perhaps would have made, which almost certainly means a deficit. There is also the prospect of an investigation by the FCA over card situations with them, which they've given out, which could again cost 140 million pounds. So with a company of that side, immediately, you've noticed, Moose, having been in the market for years, this sort of thing had happened 20 years ago. The share price might have been not, 10% maximum. Now, there is no hiding place. And the market makers and the investors said, we're not having this. And it was down 73% at one point, which was about 1.9 billion pounds, wiped off its capital. Whereas it ended up, I think, 66% down, which was 1.7%. There are two major minority shareholders. One surprises me enormously because Neil Woodford, who I have great respect for, was previously at Invesco. When I met him at a presentation 18 months ago, he said the last sector he would ever invest in is banks.
Right.
So for him to be in what you might call a slightly credit risk
subprime,
bank, to the degree that he's in there, 19%, he lost 326 million pounds from his portfolio, not personally, but his investors, which by any standards is a big knock.
Yep.
And Invesco, his previous employers, also had a similar stake in it, so they've obviously lost it. Needless to say, Peter Crook, the chief executive who's ensconced in Bradford, where the business is run from, resigned, or they said, we don't require your services anymore, you never quite know about these things. So what about the future? And the problem is, as I see it, Moose, is two things. I was thinking to myself, might be a takeover. We'll take over. We'll buy the assets for beans. But all people who know about these things were telling me not a chance. And I said, why not? And they said because it's so drowning in regulatory controls. It's like a minefield, and therefore people haven't got the time or the energy if the asset classes are such that they are driven by regulatory controls and investigations, more to the point. So I obviously asked certain people, is it going to survive? And they said it could do, but it would be a long, long haul back. Unless somebody comes out of the trees that we don't suspect and be able to have the sort of answer to bringing the thing back to life. But it strikes me that the business model just collapsed. I mean, the kind of independent people they had collecting the debts who've said, obviously not that bothered if you don't work for the company. Whereas if you do work for the company, it's part of your job to make sure the debts are collected. But they outsource some of this stuff, as I understand it. Look at the effect.
David, thank you very much indeed.